Hey traders, welcome back to the Modest Money channel. Let me ask you, have you ever tried using Morningstar and felt underwhelmed? Or maybe just read some bad reviews, knew it wasn't for you, and are looking for a better investment research company? Trust me, you're not alone. Morningstar has one of the lowest Trustpilot ratings I've seen, just 1.5 stars. That's honestly shocking for such a well-known name in the investing world. If you've been disappointed with their platform and are wondering if there are better options out there, you're in the right place. In today's video, I'm going to cover what I think are the two best Morningstar competitors that offer similar features, but with a much better user experience and features. Whether you're into stock analysis, portfolio tracking, or in-depth research tools, these alternatives might just be what you're looking for. Let's dive in. Now, before I dive into the best Morningstar alternatives, I do want to say that Morningstar isn't all bad. Despite the negative reviews, many users still find the platform useful for specific features. For example, its Portfolio X-ray tool is a favorite for breaking down asset allocations. And I have to mention their star rating system, which is widely used across the investment industry to assess mutual funds and ETFs, and at least at one time, was something like the gold standard for rating systems. I have a full Morningstar review on my channel, so if you want to learn more about what is to like about them, check that video out. Okay, let's get into the first Morningstar competitor, which is TipRanks. TipRanks has been shaking up the investment world since it was founded in 2012 by Uri Gruenbaum and Gilad Gat. It's based in Tel Aviv, and what I love about their mission is that it's all about leveling the playing field for regular investors like us. They take data from analysts, bloggers, hedge funds, and corporate insiders and put it all into an intuitive platform that's actually easy to use. First off, let's address the elephant in the room: customer satisfaction. TipRanks has a stellar 4.6-star rating on Trustpilot. As you can see, that's a massive contrast to Morningstar's 1.5-star rating, which, to be honest, is one of the worst scores I've seen for a financial platform. When 94% of users give TipRanks 4 or 5 stars, that should tell you this platform is doing something right. So, what makes TipRanks stand out? There are quite a few things I noticed, actually. One of the first things that stood out to me when I started using TipRanks is the Smart Score. This feature rates stocks from 1 to 10, using advanced algorithms to analyze 8 key market factors, like Wall Street analyst sentiment, insider trading activity, and news coverage. I think this feature is what really sets it apart. The ability to synthesize sentiment and present in an easy-to-understand graphic is brilliant to me. Morningstar's star rating system is solid for funds and ETFs, but it doesn't provide this kind of real-time, multifaceted analysis for individual stocks. In my opinion, if you're looking for a quick yet detailed snapshot of a stock's potential, the Smart Score is hands down the better tool. Now let's talk portfolios. Morningstar's Portfolio X-ray is great for analyzing your holdings and finding gaps in diversification, but TipRanks' Smart Portfolio completely won me over. Not only can you sync it with your brokerage or upload your holdings manually, but you can also compare your portfolio's performance with other TipRanks users. That's huge for someone like me who always wants to know how I'm stacking up against other investors. For me, this interactive aspect makes TipRanks way more engaging and useful than Morningstar's more static portfolio tools. Here's where TipRanks really sets itself apart: the Expert Center. There are profiles from over 100,000 financial professionals, including Wall Street analysts, corporate insiders, and even hedge fund managers. I've spent hours exploring this tool because it lets you see individual track records, success rates, average returns, the works. It allows you to really understand who is behind these recommendations. This helps me quickly determine if an article or piece of advice is worth listening to, ultimately saving me a lot of time. Morningstar does offer analyst reports, but they don't let you dig into individual analysts' performance like this. For me, being able to follow experts with proven track records makes all the difference in the world. It's one thing to read someone's opinion, but knowing they have the stats to back it up, that's priceless. If you're looking for a platform that's as comprehensive as Morningstar, but way more interactive and user-focused, TipRanks is the way to go. Between the Smart Score, Smart Portfolio, and Expert Center, it delivers professional-grade insights that anyone can use. Now, let's talk about Seeking Alpha, which is one of the most well-known names in the investment research world. If you've been in the investing game for a while, you've probably heard of them. Seeking Alpha has built its reputation on delivering detailed analysis, a massive library of articles, and a vibrant community of contributors. But how does it stack up as a Morningstar alternative? Let me walk you through it. First, let's start with what others are saying. Seeking Alpha holds a solid 4-star rating on Trustpilot, which isn't quite as high as TipRanks, but is significantly higher than Morningstar's dismal 1.5. So what is so good about Seeking Alpha? They have a lot to offer, actually. One of the standout features of Seeking Alpha is its massive library of articles. For me, this is where the platform really shines. You get access to in-depth pieces written by 18,000 contributors, covering everything from fundamental analysis to investment strategies and market trends. Seeking Alpha's articles feel like conversations with experienced investors, which I find much more engaging and practical than the articles offered by Morningstar. And speaking of articles, I love their article sidebar feature. While reading, you can instantly see stock price charts, author credibility metrics, and other key details right alongside the content. Just like TipRanks, this makes it so much easier to figure out if the author's analysis is worth taking seriously. Much like TipRanks' Smart Score and Morningstar's star rating system, Seeking Alpha has its quant rating system. This tool uses algorithms to rate stocks from strong sell to strong buy, making it perfect for those of us who want a quick, data-backed recommendation. What I appreciate is that this system analyzes multiple factors, like valuation, profitability, momentum, and analyst sentiment, which I think gives you a well-rounded view of a stock's potential. Now let's talk about one of my favorite tools on Seeking Alpha, the stock screener. Honestly, I think this is one of the best stock screeners out there. It's not just about having filters, it's about how customizable and intuitive the whole process feels. You can set up filters for practically anything: growth potential, dividend yield, valuation metrics, or even specific factors like earnings revisions. And if customizing isn't your thing, Seeking Alpha has you covered with pre-built screens. These screens are designed around specific strategies, like finding undervalued stocks or identifying high-growth companies. I've used these pre-built screens when I'm in a hurry, and they're a great way to get actionable ideas without putting in tons of work up front. For me, the flexibility here is a huge advantage. You can start with a pre-built screen, tweak it to match your investing style, and end up with a truly personalized list of stocks. It's a level of customization I haven't seen with most other platforms. To be fair, TipRanks has a pretty solid stock screener also that I didn't get into today. Morningstar also has a stock screener, but it seems pretty outdated from a user experience standpoint, in my opinion. Let's discuss the pricing of these three platforms. Starting with the most affordable. Seeking Alpha takes the lead here, especially with their current Black Friday discount. Normally priced at $239 per year, the premium plan is now available for $149 annually if you use the link in the description. For just over $12 a month, you get unlimited access to quant ratings, articles, stock screeners, and customizable portfolio alerts. Honestly, that's incredible value, especially for anyone looking for a reliable, feature-packed research platform without breaking the bank. Next up is Morningstar, which sits in the middle when it comes to pricing. Their investor subscription is priced at $249 per year, or you can opt for $34.95 per month if you want the flexibility of going month to month. However, if you use the exclusive code MM50, you can bring the annual price down to $199 for the first year. It's more expensive than Seeking Alpha, but still within reach for investors who want a solid research tool. While I think Morningstar has its strengths, the price can feel a bit steep compared to what you get, just my opinion. Finally, TipRanks is the most expensive of the three, offering two paid plans: the premium plan at $30 per month and the ultimate plan at $50 per month, both billed annually. That puts the ultimate plan at $600 per year. It's definitely a big step up in cost, but it also delivers features you won't find elsewhere, like smart scores, insider trading data, and unlimited real-time alerts. Right now, they're offering a $144 Black Friday discount, which is a fantastic opportunity to try the platform if you've been on the fence. If the Black Friday discount has been discontinued by the time you see this, check my link in the description to see if any current discounts are being offered. So, to summarize, Seeking Alpha is the most budget-friendly, Morningstar falls in the mid-range, and TipRanks is the high-end choice. Personally, I think Seeking Alpha offers the best bang for your buck if you're looking for a comprehensive yet affordable platform. If you're more of a power user and want access to advanced analytics and insider data, TipRanks might be worth the splurge. Ultimately, the best choice depends on your budget and how you like to approach investing. Don't forget to check the links in the description for updated discounts on all three platforms. Thanks for sticking around, and as always, if you found this video helpful, make sure to like, subscribe, and hit the bell so you don't miss out on future reviews. Happy investing!